And welcome to the Aaron Katsman Show. I'm your host, Aaron Katsman. We speak to you about your life, your money, and your investments. And as always, we're coming to you from the spiritual and soon-to-be financial capital of the world, Jerusalem, Israel. If you like this content, please hit the like button below. If you've not yet done so, please subscribe to both the YouTube channel and to the podcast. And if you think somebody might actually find this of interest, go ahead and click on the share button, and you can send it to them as well. So, happy birthday, Israel! Woo! 77. 77. Israel Independence Day is approaching quickly. So what better topic should we speak about than getting into debt? Just kidding. Financial independence. What is the best way for us to become financially independent? What is financial independence? I would say financial independence is to be able to pay for things, right? That you know confidently that if you've got to buy a shirt or you want to take a trip, that you actually have the money and everything is squared away and you're thinking about it and you have the money, you don't have to go into debt and you know, you don't screw up your financial situation because of that purchase. I think that's a good way. You know, when I was growing up, I remember there were these MasterCard commercials and you know, so there'd be a businessman who'd be flying all over the world, and then he'd go at night to dinner with a beautiful woman, and then they go to a show, and he'd whip out the plastic. And okay, first of all, as people who've done a lot of business traveling know, that's not so realistic. Usually, you conk out in your hotel room. That's not financial independence, right? Whipping out your Visa or MasterCard is not financial independence. What can I tell you? What is financial independence? Well, number one, it's creating a budget, knowing how much money you have coming in, what's your income, and then making your life fit into that income, not more, right? So if you make $5,000 a month, you got to make sure net, right? You got to make sure that you can fit everything into $5,000 or shekels a month, whatever it is, right? Otherwise, you go into debt, you go into overdraft. Okay, so the first thing is to create a budget based on your income. And then, like I said, fit everything into it. Next thing, first of all, if you've got any debt, get out of debt. You can't be financially independent if you're loaded up with consumer debt, you know, debts on cars or whatever. I'm not talking about a mortgage. That's the only kind of what I would call good debt that's out there. It's not great, but it's the only kind of debt that we sort of allow for, so to speak. So once you've set up your budget, get out of debt, then you want to start saving. And that should be a line item in your budget. You should have a line item for short-term savings, mid-term savings, and long-term savings. Your short-term savings should be what we call in the business an emergency fund, right? You want to have 3 to 6 months of your expenses sort of stashed away, you know, in a money market fund. It can earn a little bit of interest, but the goal of this is not to become a millionaire. It is so that when your fridge breaks, or you need a wisdom tooth pulled or whatever, extracted, that you've got the money. You don't have to start scrambling around. I'm going to sell my stocks. I'm going to pull out from a pension fund. You don't have to do anything, borrow against it. You don't have to do anything like that. You've got money in the emergency fund, take it out, you're good to go. That is the point of an emergency fund. Strongly encourage you all to create one, those who do not yet have one. 3 to 6 months of your expenses. Then you want to start saving for the midterm and for the long term. That's already going to be a function of what are your goals? What are your needs, right? Do you have kids? You know, you have braces that you think you're going to need to pay for in 5 years. Do you have weddings you're going to have to pay for in 2 years or in 10 years? Or, you know, are you past that stage in life and you're looking at retirement? Whatever it is, you got to sit down and really, really define what are your goals with the money? What are your needs? And then you create a plan. Some of that money might be, you know, maybe all the money will be for long term. You don't have any short-term expenses, right? Maybe you do have kids, but your their grandparents, your parents-in-law will take care of the expenses for certain milestones. I don't know. There are all kinds of options out there. You have to look at your own situation. It's not one size fits all. Trust me, there are people out there who are pitching that it's all one size fits all. And then all you have to do to solve the problem is put your money in the S&P 500 and you're good to go. But that's not how the real world works. Maybe one day they're going to find that out when their advice sort of blows up in their faces. But I digress. You have to understand what are your goals and what are your needs, right? And if those goals are going to come up and you're fast approaching, Your daughter just got engaged and you got to make a wedding. Well, you want to plan for that kind of thing. Braces are going to come, so you want to plan for that kind of thing. Maybe you want to pay for your children's tuitions for further education, for college or what have you. That's something that you sort of know about in advance. You're not surprised, a week before the first day of school, right? So plan for these things and then invest accordingly, right? For the long-term money, right? Let it rip, be aggressive generally. Based on there are other things that go into it, right? Your personality and what have you, your sensitivity to risk. But you want to be more growth oriented for sure, because you have a long time. And statistically, at least, again, past performance is no indication of future returns, but statistically over time, for 20 or 30 years down the road, the markets will go up, have gone up at least, probably will go up. If your money is for the short term, if you need money in 2 years from now or 3 years from now, well, you can't afford to be as growth oriented. You have to be a lot more conservative and you have to invest accordingly. So you want to become financially independent? This is the way to do it. Okay, it's not via a better affinity card. There was a discussion I saw online recently about what card is the best. What credit card should you get? What gives the best deal? And I'm thinking to myself, I can't believe actually that so-called financial planners are actually debating this, right? Because I think most people in this business aren't big fans of credit cards. Because there's all kinds of, there's all kinds of data that, these sweet programs where you get airline miles and what have you. At the end of the day, you end up spending more money than you really should, just so you can get those perks. At the end of the day, you end up losing money. The credit card companies are no fools. Trust me, you're not going to game the system against the credit cards. That's for sure. Okay, and cash back. Well, let's spend even more money than we need to, so we can get 1.5% back. Well, that's so much money. We can buy a falafel at the end of the month. It's just ridiculous. Okay. So spend what you need to spend, create a budget, and then spend that amount or less, obviously, because you want to put money into savings. So the quick tips: get yourself out of debt. Okay. Budget based on your net income. Emergency fund. Long-term savings based on your goals and based on your needs. And that will put you on the path to be financially independent. Happy birthday, Israel. You've been tuning into the Aaron Katsman Show. We speak about your life, money, and your investments. If you like this content, please hit the like button below. If you've not yet done so, go ahead and subscribe to both the YouTube channel and to the podcast. Thanks so much for tuning in, and we'll speak to you soon.